Good morning, traders. Welcome to this live Elliott Wave webinar here, where we take a look not only at waves, but also at price swings, basically, and price patterns. Now, the Elliott Wave offers a lot of information. It's a rich resource to make a great assumptions and forecasts about what to expect. But it doesn't explain everything, and it could lead to some false assumptions that might create losses. So how do we tackle that? How do we avoid that? So one thing is to do what I want to explain in this webinar is to use confirmation and invalidation levels to confirm or invalidate our Elliott wave analysis. In some cases, the Elliott wave analysis, together with price action, candlesticks, and tools and indicators, is strong enough, and that probability is high enough for us to take action just like that. But in other cases, it might not be as clear. And in those cases where the probability is lower, we are best used, or are basically it's better to wait for more confirmation or validation before jumping in any trade ideas. Okay, so the main aspect of Elliott waves is to understand the price action in more detail, but it doesn't mean that we always have to understand price action better. Sometimes it's not as clear, and in those cases, we want to be more careful and be more protective, and not race into any trading decisions too soon. Confirmation and validation levels help that process. Okay, so now for some, the Elliott waves are too complex and too complicated. So my mission has always been to break down the process into manageable bits and pieces, and not to get too overwhelmed at the start when you're a beginning trader, but to use it as a supporting tool to learn it, to practice with it, and get better at it. Because if you, of course, obviously, if you use only the Elliott wave as the very first thing without practice and experience, like with anything else, it's going to be difficult, right? So that's why I always try to explain that breaking down the process, understanding price swings first of all, then understanding how to connect those price swings, then how to understand how those price swings make patterns, and how to label those patterns with waves. So step by step, you'll get into a spot where you have more experience and you can actually use the waves in more and more situations, okay? But not typically all situations. All right, so let's dive into the chart. Before I get the chart, be aware that, of course, if you're interested in more info from me, you can find that in my my ebook, 500 pages, that discusses price patterns, chart patterns, wave patterns, Fibonacci patterns, support and resistance trends, basically the DNA of charts in detail, with a lot of images and examples, for just €24.95. Or you get the ebook as a SWAT member. You can become a SWAT member by paying the SWAT membership for €73, one-time fee, or getting a sponsorship. I think it's also possible. Just reach out to us if you're interested in that. And of course, the course includes videos, PDFs, and all the indicators and strategies, of course. So that's all included. All right. Anyhow, the chart is there. So for instance, let's take a look at the situation as of today. So for instance, in my video of last week, when price action was here, I was indicating that there seems to be a 5-wave completed here, and that could be wave 1 or A. And based on that, we're expecting ABC up as part of wave 2 or B. Now, whether it's a wave 1 or A, we're not 100% sure. But in this case, it's not that relevant, because in both cases, we're expecting a wave 2 or B up. And within that 2 or B, in both cases, we're expecting an ABC up. And we already had the first part up, A, so we expected a B and then a C. As you can see, it's really not that relevant, the exact wave formation, whether it's a 2 or a 1, 2 or a A, B. In both cases, we expect a C up and then a downside. And that's what happened. So you can see that at that point, I was looking for a bounce to occur very clearly at the 78 or 88.6 fib. Plus, we had the Fibonacci targets lined up at the minus 272 and minus 61.8 target. As you can see, they were in this target zone around 122.26 and 122.50. And that's where the bounce happened. And the invalidation spot was this top, right? A break above that top would invalidate the wave 1, 2, but it would also invalidate the ABC zigzag, at least. Maybe not the ABC flat, but the zigzag. And we expected a zigzag because the 5 waves down. So it would invalidate both the wave 1, 2, as well as the AB. So this top, any price action above that high would invalidate it. That was my invalidation spot. Any movement above that. The confirmation was price actually reacting to this level, or the break below the 20 MA, or the break below the fractals, or the break below the trend line. There are multiple confirmations as we progress into the future. Each confirmation makes it more likely that price is moving as we expect. So there's not necessarily just one confirmation. There could be multiple confirmations. Each confirmation just adds to that momentum, adds to that probability that price is indeed probably moving lower. Now, whether that is so basically, if I felt very confident about this analysis, I could trade a pending order at 122.26 and 122.50 and just trade at those levels using all my experience and accumulation of practice. There are some moments that I feel confident enough, of course, that I might do a pending order right there, right? There are a lot of things here. The head and shoulders pattern, besides the wave patterns, the head and shoulders pattern, the resistance, the divergence pattern. So all of that leaning towards a bearish bounce and supporting that vision. So in that case, I don't think it's a strange idea to trade with a pending order in this particular case. But I have to add that the bar for such trades is much higher, right? There has to be a lot more confluence and a lot more elements coming together before I would trade a pending order. So the bar has to be higher. I wouldn't just trade with a pending order in most cases. In most cases, I would wait for a price reaction to confirm as a trigger that price is indeed responding to that level. Okay, but if there is a lot of confluence, there is that option to do that. But typically, the more experience you have, the better you are in spotting those key zones and key trades that have an edge for such pending orders. Okay, using pending orders too many times could be problematic because and lead to more losses. In that case, you might want to switch to more market orders that are based on candlestick patterns and reactions. Okay. Now, in this case, I think it was strong enough, but doesn't mean that the multiple trades are not possible. Or if you were not sure, you could always wait for the reaction. This wick is not bad. The bearish candle after that is probably better. In any case, the stop loss would always be above the invalidation level. So no matter which trades are taken, whether it's these dojis, this wick, or this bearish candle, with a stop loss above that top, all trades are safe. The break below the fractals could already use actually this high as a stop loss rather than using the immediate the biggest top here. And the break below the 20-minute low could actually indicate you could use the high here. You could still use the invalidation level here, the high here, or even these bearish candle highs. Although that's of course more risky that the stop loss could get tagged. The break below the trend line could also use a tighter stop loss, like the candle high, or maybe these candle highs, or the candle above the 20-minute high. So now with this break and the second close below the 20-minute low, and the first close, all of those trades worked out pretty well too. Now the next main thing to look at. So all of that is confirming the fact that this is bearish impulse, 5-wave down, 3-wave up, expecting 5-wave down. Now that did happen. At the very least, we had 1, 2, 3, 4, 5. You can see that on the hourly chart a little bit better. And by the way, within wave C, we had a wave A up, and then we had an ABC sideways, right? We had also inverted head and shoulders, left shoulder, head, right shoulder, like that. Then we had a break above these fractals, and we had 1, 2, 3, 4, 5 waves within the C. So A, B, C, and C had 5 waves up. Okay. Now we're expecting 5 waves down because it is 5 waves in A or 1, 3 waves up in wave 2 or B, and then we expect 5 waves down and wave C or 3, right? So we had that. We had 1, 2, 3, 4, 5. That's one way of looking at it. But we have to also indicate that we're not, of course, sure if this is a wave 3 or C. Now, looking at this fib, the confirmation of a wave 3 would be a break below the minus 61.8 and minus 100 target. So we're very far from that. So we haven't confirmed wave 3 yet. And it could easily be wave C. We don't know. It could be both at this moment. Specifically with this strong bullish bounce, that brings even more uncertainty in this particular analysis, right? Whether it's a 3 or C down. So as you can see, at this spot here, there was a high probability of a move up and down. The down move was the best one because that was with the anticipated stronger direction. So there was a high probability here and here for a down move. But we just didn't know how far because it was either wave 3 or C. So that was the element that was unknown, and we were not able to attach a particular, a higher probability to any of those two versions. Maybe slightly more downside, maybe slightly I attach more chance to the wave 3 for full clarity. Actually, because of all other long-term multiple time frame analysis, I probably would have said 65.35 for downside for wave 3. But the confirmation would be to break below these fib targets, and that didn't happen. Okay. Now that it didn't happen and we had a strong upside, we're back to 50-50. So as you can see, this is a spot where there's a lot of uncertainty. I just showed you a spot where there's a lot of certainty. In my view, this is a spot with a lot of uncertainty. So in those cases, those happen a lot too. It's best to be careful and not trade with less risk or not trade at all, and wait for a confirmation. In my view, the confirmation would be a break above the 20-minute high for a push up, or basically a break to the downside, followed by a pattern, sideways pattern, an ABCDE triangle or ABC, and followed by a break to the downside. So that's what I would wait. And if one of the two happens, then the odds of an upside or downside taking place have risen in probability, and therefore start to make more sense for potential trade ideas. So at this moment, with Elliott Waves in such an uncertain spot, I think it's better to wait for information and wait for confirmation and validation. That's how you can use those concepts for not getting trapped into trades where the probabilities are not as good. Okay, and this is an excellent spot where I think the odds and the situation is not as clear. In both cases, this could be an ABC down for wave 4, and up we go for wave 5 for one more higher high. Or this could still be a wave 1, 2, and then a 1, 2, 3, 4, 5 for 3, and this could be a wave 4, and then down for 5 of a larger wave 3. So both scenarios are possible. Both scenarios are not invalidated. And we're waiting for confirmation or invalidation, basically, of one direction to better estimate what the chances of the next price swing. Okay, so confirmation could be not only the 4-hour chart price patterns and the 20 EMA zone, but also on the daily chart. It closed below the 20 EMA low, makes the bearish breakout more likely. It closed above the 20 EMA high, makes the bullish breakout more likely. Okay. There are a lot of mixed signals at the moment. Weekly chart looks bearish. Last week was a bearish candle with more wick on top after three weekly candles with wicks. Daily candle had a bullish candle, a daily candle on Friday. Looks more bullish. Ultimately, it's at a decision zone at this moment with the 20 EMA flat, right? It could break both ways, waiting for that information. Okay. So from that point of view, Elliott Waves are great. They offer a lot of information, but in some cases, they're going to, it's not going to be a very clear favorite. And in other cases, they are going to offer a very clear favorite. In both cases, we can use invalidation and confirmation to help confirm the actual trading ideas based on that analysis. And the less experience you have, the more important I think it is to use Elliott Waves as an extra and not as the main tool, right? And to use moving average and oscillators to also make your wave analysis more rules based and less guesswork, right? And that's something I explain in my course in big detail, and also in these live webinars, is how do you make it more let's say scientific in a way, right? Less guesswork and more rules based. Even though that your analysis is more rules based, of course, there's always a probability. Nothing is 100%. That's just the way how the market flows, right? There are an indefinite number of options at any moment for price to do whatever it wants. And as price and information is changing, those odds are in a continuous flux, in a continuous change. And patterns can fail and patterns can work out. It's up to us to assess probabilities to these situations and find basically focus on the spots where the probabilities have the best odds, because those are the trades that typically work out the most and give us the edge in the long run, and skip the trades that don't have that edge, okay, that don't have enough probability. So all in all, if the trades have good probability, pending order is an option. If there's a high chance of price, making a decision. If the odds are too low, then waiting for confirmation makes sense. We can wait for multiple confirmations. If the probability is really, really too low, then just waiting, right? Of course, not trading could be even better. Or waiting for a breakout / confirmation of price to move into that direction before trading it. Okay, that bar could be higher or lower depending on how well you know the pair. For instance, the euro dollar, I would trade a trade setup sooner, even though I would say the probability is lower, because I think that I know the euro dollar better and my track record is better. If I compare that to track records with other pairs, it's better than those. So the bar with other instruments is higher. The probability of the analysis playing out needs to be higher for me to trade it, because I'm typically less accurate with those other pairs. The euro dollar I know the best, and therefore typically my assessment is the best of the situation. All right. Now that said, personally, I've noticed that using my tools helps me a lot overall in improving my trading ideas. And without these tools, you know, the just trading a blind chart was way more difficult when learning to trade the Elliott waves. Right here, right now, because of my experience, I think I could trade without these tools probably in the same way. That said, I don't want to underestimate it either, because I'm so used to these tools, and the information that it provides me is so rich that I don't want to underestimate how important these tools are. I get a lot of info from that, and a lot of decisions are based on that. So I think it's a great way of learning to understand and analyze the Elliott waves quicker, with less effort and more accuracy, basically. Okay. So anyhow, I guess that wraps it up for today. Big thanks for being here. Of course, feel free to reach out to us through our website. Let me quickly show you how you can become a member. Of course, just go to elitecurrency.com, click on services, click on Forex and CFD, and choose what you like. Zusier, Ultimate EA from Mislav Nikolic, ECS Live, SWAT. Here on the 4th position, click on this arrow to become a member. Or if you just want more information with tools and strategies, or you want to trade options, or you want our daily analysis, click on blog or education or webinars. You can find it all here under these tabs. Okay. In any case, wish you all great trading, and see you soon. Cheers. Bye-bye.